Hey guys, welcome to this video. I'm going to walk you through my 2024 trading plan. It's going to show you exactly what I am doing step by step to make money in this market, and I follow this plan to a T. And so far this year, in the first 23 days of the new year of 2024, I've made roughly $3,000. And so I'm going to walk you through exactly how this works by showing you what the trading plan is and also showing you step by step what it looks like on a chart and how we can take advantage of this. Anyways, to show some proof here is my P&L year to date, $3,128 so far for this year for 2024, following this plan to a T. So now let me show you how you can use this plan to make money too. First things first, we need to set up our chart so that it can look like what we are doing here. So you can use TradingView.com, Yahoo Finance, your broker, whatever charting platform you want to use, this will work. Simply go into the indicators section. And so again, if I go in here to indicators and I type in Bollinger Band, B-O-L-L-I-N-G-E-R, Bollinger Bands, and I add that to my chart, it will look like this. I want to make some additions to it, so I'm going to go into the settings. I'm going to change the length to 200. I can keep the standard deviation as 2 or 2.1. Whatever I want to use. I'm going to bump it up to 2.1 here, and I'm going to click OK. So now I have this rough band approximation of what you're seeing here on the trading plan. Don't worry, if you sit till the end of this video, I'll show you how to do this trading plan for free. So if we look in here, we have two things going on. Either the market, the S&P 500, is inside this band, or it's outside of it. When it's inside this band, the market is trading like normal. What do I mean? We're going to be using normal strategies. When the market is outside of this band, either to the upside or the downside, we have hit overextension points in the market. So if we're going here, we are overextended to the upside, so we're probably going to snap back and pull down. Again, we saw that, so let me move this drawing. We saw that back here in 2023 when we kind of had that sell-off. We saw that here when we pushed into this level and sold off back in 2021 and 2022. And the famous COVID crash, we held above this overextension level for so long that we just snapped down to the downside and saw this COVID crash. So also, when we go to the downside, when we're below this band, we tend to see that movement up. So when we break down to the downside, we're going to be playing reversals. However, inside this band, we'll be playing normal strategies. As you can see here, if SPY and ES is trading inside of the band, use the 1-1-2 strategy. So this is a strategy that I've been talking about recently for long-term trades. Also forgot to include here that I use my normal credit spreads trades. So again, my 10% credit spreads trades is what I use there, as well as the 1-1-2 trades when the market is inside of the band. So again, you can see here 90 days out using ES or MES to set up a 1-1-2 trade. If you want to learn more about how to structure this trade, again, you can watch some of my other YouTube videos that explain it in depth, but we're going to be placing a 1-1-2 trade inside of these bands. Also, there's different ways that we can turn the 1-1-2 trade into different hedges. So we can turn it into a triangle hedge, or we can turn it into a put debit spread hedge. And so again, by default, I'll be using the triangle hedge because it allows me to make a lot of money and kind of offset any other 1-1-2 trades I have. So again, inside the bands, I'm using the 1-1-2 strategy, and I'm using the triangle hedge once I've made a max profit on my short put. So that's how I manage my 1-1-2 trades. Now next, if SPY is trading inside of the band and IVR at least doubles, then I will use a strangle strategy. And again, this is one that I've actually used last week when you can see here the market took a little dip down, and when the market dipped down, IVR doubled. It was currently around 7 on the ES and jumped up to 15, so it doubled. So I put on a strangle because when you're doing strangles, you're selling a lot of options. You're selling both a call and a put. So when you sell, you want the IV to go down. So when IV increases, you can sell strangles, and not only will the price go in your favor, but also IV will come down, making or allowing you to make a lot of money quickly. Hence, I'm up 21% on my strangles trade in the last 4 days, and that's all because I was able to enter in when IVR doubled. And so again, that's the next strategy, the strangle strategy. When the market is inside of the band, use a strangle strategy when IVR doubles. It's a 45 days out. We're going to be selling a 5 to 10 delta and a 5 delta call for the put and the call, and then take profit at 25% with a stop loss at 4x the credit. So that is the strangle strategy. Now, when the market breaks outside of this range, what we're going to do is we're going to be using our long put or short call strategy. So if SPY is trading outside of the trending band, then number one, we want to exit any long long positions. Why? Well, because that means that the market is overextended, a pullback is likely. So the way that I treat this is I wait for the market to break above and then to come back down through it. So you can see how the market is kind of breaking above. This is on the Bollinger Band. I usually use the trending band, but this is for your example. The trending band is only a private indicator for my students. But again, if you want to replicate it, I showed you the way to do that here with the Bollinger Band. But anyways, you can see here it's above it. When it breaks above the trending band, I wait for it to come back down through it. Once it does, I exit my long positions. I keep my hedges on, and I also use my long put or short call strategy. The long put strategy is dictated here. It's a 45-day long put that I buy on ES or MES. I buy the 30 delta put, and again, this is a Hail Mary strategy where I'm either going to lose all the money that I just used to purchase that put, or the market's going to drop and come down like we had here, or maybe even go crazy and here, and I'll make an 1,000+% return. So that's why it's a Hail Mary trade for the long put strategy. And so again, that's a great strategy for when the market is overextended. You can do the same thing to the downside, but I prefer just to get into 2 trades when the market is recovering, because it's still a great way to profit from it. All right, so those are the strategies that I look at for different phases of the market. Why? Because almost every strategy you've ever heard of works, but only in its own respective type of market. And so this is how I use a band to determine what market is what and how to take advantage of those strategies. Again, when we have risk management here, we have 50% of max buying power when VIX is below 25. So what is that? Well, if we go to VIX chart, you can see here VIX, it jumped up to around 15, hence why I was able to enter the strangle, and now I'm making good money on it because VIX is declining. But VIX is trading at $12.85 right now, which is below 25. Because we're trading futures, it has span margins, so we want to be safe. So no more than 50% of my buying power in trades when VIX is less than 20. If VIX is over 20, span margin is accounting for the volatility, so I can go up to 75% of my max buying power. Always have a stop loss on my trades, either manual or mental, aka I have the broker monitoring it for me, or I have a mental loss like, hey, once it gets here, I'm going to exit. That can all be done right there. Next, the trade rules. Plan your trade and trade your plan. Never trade without a plan for exit and entry. Have patience and trust the strategy. Never modify the plan during a trade. Only enter a trade when your rules are met. Never chase a trade. Accept the fact the market is always right. Never revenge trade, and there's nothing wrong with closing a winner. All right, guys, this is my trading plan for 2024, and how I am profiting this month over 3% on my accounts, which is insane and amazing. Again, my goal is 2% a month. So again, if I'm hitting 3%, and I still have a week left in this month, then I'm doing really, really well. So again, if you want to make some money this month, if you have at least $5,000 to $10,000 in your trading account or more, I highly recommend that you use this trading plan. If you want it, it's for free for all my 10% credit spread members, and you can actually get this plan for free by joining the free trial linked down below. That's right, you can go and start a 14-day free trial to our program, get access to all the courses and resources like this trading plan, and download it. And if you never want to continue after the trial, that's fine, but at least you have all these resources. All right, guys, thank you so much for watching, and I will see you in the next video.